Hello, it's Graham Bibby on the 29th of June 2015. Welcome to this week's Camtasia. Camtasia being a video of my screen and what I'm seeing. It's always a bit of a task knowing what to show you because I look at so many things and there's so many observations that I could pass on, but I don't want to drown you in information. So first of all, I thought we'd have a look at what's happening in the US market, and then I might show you that in relation to other markets. Last year was a particularly sort of volatile year. Right in front of me now I have the Dow Jones Industrials, Dow Jones 30. 14 here means the start of 2014. And I've showed this video many times to longer term Insider Club members, but I just want to show you again why we moved to cash so many times last year. This downtrend triggered off around this level. Stop loss signals in many of the stocks we were holding, so large amount of cash was raised then. Some cash was raised in this fall, cash was raised in this fall, cash was raised in this fall, and cash was raised in this fall. You can see that during that, so we got 1, 2, 3, 4, 5 periods of cash, and this year didn't start off much better with this decline. Now we've been in a tighter range, but we've really been going nowhere since the beginning of the year, although the Insiders Club is well above the returns of the market. So this circle here shows you where we were 3 days ago, which is 1,800, and at the end of 2014 we were 1,800. Now from a technical perspective, where I've got this chart drawn here, this top where the arrow is lower than this top is lower than that top. That signifies that sellers are coming in after a rise at a faster pace, so we're not rising so fast, so that is not exactly bullish. Here where we've got the market stopped at this level, that indicates that's where buying interest is coming in. And then after this decline, buying interest came in at a higher level than here, so that was positive. We tried to break to a new high here, didn't, and then we came back to test this again as support, and then hey presto, we went a bit higher, came back, and then buying came in, and then we went to a new recent high, which was great. I would have thought we would have carried on in this direction, but we haven't. We pulled back to the 1,800 level, which is the top side of this downward resistance level. Often when you go up against something, it's called resistance, but when you break through it, you come back to test on it and it becomes support, which is what's happened here. And then also from a technical perspective, and there's no hard and fast rules with placing these lines, but you just look to where the general region of where resistance has come. So there's resistance here. Now this line here, 1,800, is providing support, but I really like to see the market picking up from here. That's the Dow Jones itself. Now the Nasdaq is full of more energetic companies, and that is approaching the new high. It was since the end of February basically treading water. We tried to break out here. This should be really positive, breaking out here with this higher bottom here. That should be positive, but then we broke down below it. That was looking bearish. It coincided with the Russell 2000 looking bearish, and then we came back 5,000 support and turned up. And again, I would have thought we're going to get upward movement. So for 2.5 months, been a bit frustrated here, wanting the thing to go higher, but it's not. If I go through here, show you the Russell 2000. Now again, this is end of February 2014 to into March this year. Market gone nowhere. We had these sharp rises, declines, a lot of cash held, and then we broke out to the upside. Now this uptrend here, normally you'd expect it to continue. And you remember in one of my previous Camtasias, I was saying that we broke down below the support level, which was negative. The Russell 2000 seemed to be leading the way, but we came down above this support level and then we've risen, and this was a bottom here and we've gone higher, and this is the bottom and we've gone higher. Really like to see it take this top out, but it's more positive than it was just a few weeks ago. Now, I just want to take you through a few of the stocks in the Insiders Club. This is EPAM, which is in the information technology. Great night last night, 3.11, new high breakout. This top's higher than this one, so that's quite positive. Some people ask me why I don't put stops in the market, because if I did, in this decline here, we would be stopped out. But see that line there just on the side? This line here on the side indicates where the stock ended on the day. So it went from over 66 to below 58 in the day and ended here around 65. Same thing here, and then stop loss will be just under 66 now, almost 72. So that stock looks pretty good. Now, another stock which might surprise a few people is Skechers. Don't know if you've been into one of their stores recently, but we did buy this stock and is up 2.9. I'd like to see it move to new highs, but looking very, very positive. One stock I featured quite often here, especially showing you charts, is Gilead Science. It's a Irish biotech company. It's really undervalued. I think the PEG ratio is somewhere around 0.4, 0.5. Give you an example, the S&P 500 average PEG ratio is 1.7. So this stock's got huge earnings growth and a low PE ratio in relation to the earnings growth. So I said, look, when we got a competition here, so we've got support around this level, the generalization, and resistance coming here. Then we broke through, we tested back, which I've indicated earlier on. Then we should be moving higher, but no, we had to come back, test back again, and then we've moved in the last month from 100 to 112, up 12%. The stock looks pretty good to me. Looks to be into a nice uptrend. Synaptics is another company in the Insiders Club. It's reached a new high last night. It's up in the last month from 85 to 99, which is getting on towards 18% move. NXPI is also in there. You know, it broke above here, so nice support here, and it's moved from 101 to 110. So that's looking pretty good. I've got to put in a stock here I might have mentioned before, or did mention before, Skyworks Solutions. They make quite a lot of the components in the iPhones, amongst other things, and also in the new iWatch. So again, you know, stocks don't move in a straight line. From the end of February until the end of April, the stock really didn't go anywhere. It went up and it corrected back as they do. And this stock corrected from 101 to 90, which is around about 11%. But it was still in an upward trend, and we've broken out, and the support level is here. Last night it was down 0.9, which is a bit disappointing because at one stage it was at a 110 level, it's 107.65, but we're still in that uptrend. So that's looking pretty good. If you want to know what's happening elsewhere, I mean, this is the Australian stock market, and what a mess that's been since last August. Not only is their currency going through the floor, but the stock market is as well. Now, this is the ETF, which is a replication of the Australian stock market. And that stock market was above 27 and went down to 21. That's somewhere in the region of at least a 25%, if not more, correction. If you build on top of that where the currency is gone, people who've got their self-managed supers with me are very lucky because they didn't lose 25% of their money, and actually they gained from being in US dollar assets which have gone up. Now, it looked like from the beginning of the year that we're going to be in this uptrend, but then we had resistance all around here and we've turned down, as has the Australian dollar, which I can show you in a second. I'll just switch over to my Insiders Club FOS watch list, and in here somewhere I believe I have the Aussie dollar, or maybe it's not in there. Let's have a look in my global roundup. This is my global roundup, and somewhere in here we're going to find the Australian dollar. Just bear with me a second. That's how bad it's been. There we go. Boom. Here's the Aussie dollar. So the Aussie dollar has gone from 99 and it went to somewhere like 75, which is a 20% loss in the currency. This is why Australian self-managed supers need to get their assets exposed to global markets. One of the ways, and one of the best ways, I think, is to join the Insiders Club FOS, because I monitor 46 world stock markets, and I monitor sectors, and I monitor currencies and commodities. So in April, when the oil price started to go up, it tried to regain, but just in the last few weeks, it's gone from 81 to 76, which is nearly a 10% decline in the market. So not great at all. If I go back to my FOS list, one of the star areas that we've had in here has been China, and I'm just sending out a special report about China. I signaled a breakout here where this arrow is in July, and this particular ETF, PEK, was below 30, and even with last night's correction, it's 63. It's over 100%. So when you are able to go global, then there's a lot of opportunities there. So ideally for me, somebody has assets in the Insiders Club undervalued superior equities. They then have money in the Insiders Club FOS, and a new service that will be coming out soon will be the Insiders Club Special Situations, which is beaten up stocks in areas that have been trashed, like oil, mining, gas. It could be Brazil, could be Russia, or it could be sexy stocks like Tesla, which I still like. But that's a new service to be launched very, very soon. But right now, I'm allowing people to go into Insiders Club FOS on special preferential terms. I quite like the biotech area. This is available through that service. This is a fund that represents biotech. You can go into all sorts of things. You can go into retail. This is a retail ETF. It's a bit stagnant at the moment. Looked like it was trying to turn up. You can buy things like Hong Kong, Philippines, Brazil, emerging markets, even natural gas, which we wouldn't be at the moment. But look at natural gas. The ETF was 600, and right now it's trading at 28. So it's down 95%. And you can very clearly see that is a downtrend. That is a sideways movement. So even though at the moment, if I just zoom in, we're still headed lower again, looks like a base is trying to form around this level. And let's see if it does, because what goes down, eventually people cut back on production, and then it usually goes back up again. So I want to do this in my special situations, because it will be picking funds and stocks in this area, because everything will have gone down. That's gone down just through the negativity of that area. So let me just check the time. Where are we now? We are 13.26 minutes into my Camtasia. So look, it's Graham Bibby signing off for this week, saying the market's moved back to near the highs of the previous weeks, and then it's corrected back a bit. We really need to see it moving up again now, and then you'll see what fire is put under the undervalued superior equity stocks. And I still believe I've got a special report out on China. The number one reason why China's stock market should seriously outperform for many years to come, and it's all to do with the Morgan Stanley World Index and the Russell Emerging Markets Index increasing its weighting on China, and it's going to go up to 32% from 5%. That is huge. 6 times more holdings in the Chinese stock market, which should fuel the continued recovery. So it's Graham Bibby here at CEO@richmondth.com, saying please send me any questions you might have. If you've got any existing holdings and you're not sure about them, feel welcome to send them, and I'll take a look at them and I'll give you a free consultation. And if you're starting off and you're not sure and you've got a lot of questions, please feel welcome to ask me that as well. This is very much my giving you 35 years worth of experience of daily looking at world markets, I identify where you should be and when you should be, and then I monitor the positions every day and tell you when you shouldn't be there. So Graham Bibby signing off now from the Paradise Island of Phuket, wishing you a great week ahead. Bye bye.